Paul, we have chit chats all the time. We're going to lunch. We're at your house. We're playing poker. We play basketball together. And I ask you these random questions. This is how the show started.
You're right. It's exactly how the show started.
Random questions. That one lonely day, I was like, "What do you look at when looking at a stock?" That was the birth of the 8 pillars, which we'll be updating very soon, folks. But Paul, like in general, remind our again. I worked for a company in Columbus, and they helped. You know this company, and they did team coaching, and people thought it was like just a repetitive. I like being a repetitive reminder. We're professional reminders. Sometimes we have to be drawn back in this crazy world of invest in this, invest in that. YouTube filled with a bunch of hype craziness. It's hard to get yourself through the fog to find good investments. And we've been criticized. These guys don't buy anything. And so in essence, double down on this idea. Speak to me and our wonderful patrons and viewers is what makes a good investment, or in other words, what stocks should we be avoiding in this interesting time of the market?
So it's very interesting. I didn't send this to the group chat yesterday. I saw something on Instagram, an article on CNN or something like that saying best markets for a rental property.
Mm-hmm.
They brought the median price and they brought the average rent. And they said, here are the growth rates for the values in the next year. And I was like, shouldn't they be comparing rent to the price of the home? But they weren't doing that. Why? And by the way, all those cities, except for one, were in the booming markets. And I'm thinking to myself, they're missing out big time. So what investments should you avoid? That's going to change year to year to year.
Mm-hmm.
What I like to avoid is hype. Here's why. Think about it this way. If something is over supply and demand, we've all heard this, right? If something is very in demand, what happens to the price?
It goes up.
Right. So if you see a stock like Tesla, everybody loves Tesla, everybody likes it, they're going to bid it up, and guess what's going to happen? It's going to go up and up and up until eventually that doesn't happen. Go look at Intel, look at any .com stock from 2000. Look at any tech stock from 2000. They had a massive fall. Even if some of them rebounded, they had a massive fall from their peak. Why? Because suddenly, all of a sudden, people care about value, people care about anything besides the hype, right? The hype goes away at some point. What I like to tell people is the best investments to avoid are the ones that are overhyped. The second I hear, oh my God, this is awesome from an average person, I avoid like the plague.
Yeah, you're almost out, right?
Not almost out, I am out. Some people might say, well, Paul, you're missing out opportunities. Look at Tesla, it's up 10 times in the last year. I'm fine with that.
Whoop-de-doo, right?
I've never had FOMO in the last 15 years on any investment.
Well, a lot of people struggle with this, Paul. I mean,
FOMO is the hardest part of investing.
I think something we're combating is there are so many channels and news sources out there that I don't think the average viewer knows it's hype. It sounds like it's
normal investing advice.
Normal, great investing advice from a dad in his basement.
Just think about it this way. 95% of our viewers are men. All right, guys. If your wife or girlfriend was the most desired person in the world, would you be able to date them? Now, you're going to sit there and say, of course I would. No, you wouldn't. You wouldn't. Because some billionaire who's decently good looking will get your wife or girlfriend.
They say this about my wife, Paul.
Yeah, exactly. I mean, you definitely overachieved. You outkicked your coverage, as they say.
I look like Chewbacca.
And your wife looks like Princess Leia.
Keep going.
I don't know anything about Star Wars. That's why I sit there and say, I look at it going, it's all about supply and demand. And when people overhype something, the price goes up and up and up, and it builds in this euphoria. It builds into this whole thing, recency bias of, oh, the stock went up a lot already. It's going to keep going up. Keep in mind, Tesla went from $660 to $900 a share, and now it's in the low sevens. It got as low as $580, and I think it's going to go lower. Does that mean it will always go lower? No. Does that mean I'm right? No. But what it does mean is there are 10,000 stocks out there. If 100 are hype, you buy all 100, I think you're going to have a problem. Mm-hmm. What I'm urging you to do is find the 200 to 300 that are selling for cheap values based on revenue, profit, cash flow, and other balance sheet items, and whittle that down to 30 or 40 that you love. And guess what? The best investments are the ones nobody wants. If nobody wants them, they're selling for cheap prices. The same reason why the most desired investments are the ones that are crazy high that I want to avoid. If you find the ones everybody's overlooking, eventually markets turn around.
This sounds really boring,
It
Paul.
is extremely boring, but that's the point. Mm-hmm. Good investing is extremely boring. That's why there's only a handful of people that can beat the market consistently. And guess what? They look stupid over longer periods of time when the market's all hyped. Look at Warren Buffett. He hasn't beaten the market in the last 10 years. Are you telling me that my 18-year-old caddy at Firestone Country Club is a better investor than Warren Buffett?
Right
If
now,
you think
right
that-
now, it looks like it, Paul.
Why? Because recently he has bought into stupid investments. Good for him. And every major bull market shows Warren Buffett that he's wrong. Warren Buffett, not many people know this, in 1967, 68, he returned all of his investors' money to them saying, there's nothing to buy out there. I'm out. I am out, he said. I'm done. He's like, there's nothing to buy. Why should I go put your money somewhere else? I'm not gonna take it. Warren Buffett gave all of his money. And that, by the way, 1967, 1968 was a huge end of the bull market. From 1967 to 1981, guess where the S&P went?
Go ahead.
Flat.
Uh-oh.
It did, this is it, it did this. That's what it did. For 14 years, it went flat. 15 years. And you're telling me you're smarter than Warren Buffett? Come on. Take your level of arrogance out of here. Now, what does Warren Buffett do well? He does well because he avoids hype and he buys value. He wants to see where there's a mispricing in stocks and investments, right? Now, what Mo does is a lot different when it comes to his stock trading, right? You make money by doing charts, but what do you care about the fundamentals of a company when you're doing charts?
I don't care at all.
Why is that?
Because all I'm doing is looking for patterns.
Correct. And people will confuse that a lot, right?
Yes.
So from my perspective, if that is your philosophy, more power to you. You should do it. There's a great way to make money. You can probably beat the market doing that, but it's a lot more work.
Yep.
Right?
Yep.
What's the work?
Well, you have to sit at your computer and identify these patterns every single day.
Yeah. And by the way, if it speaks to you, please go do it because it is a wonderful way to make
We have
money.
a lot of people that are doing it.
A lot of people. We have 750 people in our Patreon who do that, and not every single one of them, but the number of people making money a couple people have quit their jobs.
Yeah, we've had a couple of people.
Quit their jobs.
Cash, for example, he showed me his progress from year to date, January 1st to today, and he's up 20% this year.
Wow.
Yeah. And he's saying, even if I can't return 20%, I'm confident that I'm going to be able to return somewhere in the 12% region over a long period of time.
Yeah. And by the way, it's a good way to keep yourself busy.
Yeah.
But in terms of what investments to avoid, there's not a specific one, but to me, it's avoid the hype. Whenever you open, if you look at avoid the ones that your neighbor's 17-year-old pimply kid is talking about. Avoid those ones.
Paul, you don't watch a lot of YouTube, but I am saddened to see there are tons of channels of people that they're making the almost mainstream to be investing in these AMC. I mean, they.
And my question is it possible that everybody is right on those investments? If you don't understand how that doesn't make sense, be more careful.
I'm hearing stories of normal people putting 75, 80 grand into AMC and just YOLOing.
And then years later, just like in every major bull market, whether it's real estate, stocks, anything, there's a lot. Unfortunately, ends up being the little guy who ends up getting hurt. Because why? They're the last ones to the party. That's what makes the overhyped part of it the overhyped part of it. They're the last ones to the party. And unfortunately, it ends up hurting them. But with this channel, we can teach fundamentals. Will we look stupid during boom times? Absolutely. I have looked stupid. My friends tease me, Paul, you've missed out. Yeah, I missed out. But yet, when it comes to investing, guess where they all go to get advice on what to do? If I'm so dumb, why are they all coming to advice for me? Paul, I look at this company. What do you think of this company? What does it matter? I don't know what I'm doing. Of course I know what I'm doing, but I'm not going to follow the hype. And by the way, you can follow momentum and hype and charts and make money off that. But if you're justifying a fundamental belief based on something, if you're justifying a stock based on fundamentals that don't make sense, you're going to end up hurt. So I avoid all hype stocks. Anything that's not fundamentally based. Does that mean I don't like growth? I absolutely love growth. I don't like to overpay for growth. And that's what happens when because you guys don't know how many shares are outstanding. You don't know how many shares Tesla's issuing every single year.
Yeah.
Tesla's screwing their investors they're doing the right thing, issue more and more shares, but you think that's helping you. It's not. It's giving you a smaller piece of the pie every single year.
If you need to keep hearing this, just go back to all our 850 videos over the past 3 years. We've been incredibly consistent on what we're saying.
Somebody said to me, that's the most common comment I get when people follow me on Instagram. I get messages from people like, man, your message is so consistent. I'm like, yeah, because this works over long periods of time.
Even to the point where we avoided Alibaba for months and months and months. And when it finally tanked 40% and fell into our wheelhouse of value.
Isn't that amazing?
All of a sudden, we're championing fans of it. And while other people are running, and all the analysts on Seeking Alpha are saying it's a sell. It's a sell. Kathy Wood, it's a sell.
In 2009, emails. I have literally phone calls from my financial people in Chicago saying you're the only phone call we like. Why? Because I'm the only one talking positively. And then that same guy who said that to me 4 years later, when I was like, man, it's getting harder and harder to find good deals. Like, well, Paul, but you were so pro stocks 3 years ago. I'm like, yeah. Then valuations changed. That wasn't 3 years later. It was like 5 or 6 years later. I'm like, valuations drive my decisions.
Yeah.
A great investment can be overpriced. Sorry, a great company can be overpriced. That makes it a bad investment. That's just it. And that's it.
When all this comes crashing down, as it will, in the cyclical world that we live in, I think more people will be turning to this channel, and then at that point be asking for our advice or our thoughts on potential.
And we'll be
deals.
there to help you out and say to you guys, stocks are down a lot, and they'll probably go down further. But if you buy today, you'll probably be, in the future, when stocks are down, there'll be a time when buying will be a great long-term perspective, and stocks will probably still go down. These things don't ever happen in a straight line, unfortunately. There's a lot of ups and downs, and I think this is going to rebound and all this stuff. It's just the way it is. But we're here for that. We're here to teach you how to fish, how to really keep your mindset the same. Because investing is not hard. It's the mindset and discipline stuff that makes. In fact, I take a very simplistic approach to investing. Very simplistic. I look at free cash flow, and these 8 pillars I look at really drive a lot of my decisions. Doesn't mean I buy every 8-pillar stock out there. Doesn't mean I don't buy. I have a 1-pillar stock. I have Carnival Cruise Line. That's a 1-pillar stock. Mm-hmm. I still own it.
That's our take on investments. Good luck out there. Follow us if you're intrigued. If this resonates with you, you can join our Patreon, talk to people all over the world. 5,000 people who think just like us. And that's our take. Fondle the thumbs up. Join our live streams, Mo in the morning at 9 a.m. Our public live streams are Tuesdays at 2 p.m. And we're giving away a second Tesla this fall when we hit 100,000 subscribers. So if you're a patron, you're automatically entered to win one of those. So thanks for watching. See you next video. Appreciate it.